us to talk a little more about the most recent developments in the ongoing euro crisis is the president of the Bavarian Finance Center, a highly respected independent think tank and finance platform. Wolfgang Gerke, thank you very much for coming in. An enormous amount of pressure continues to build on Europe's leaders and finance ministers. Can they deliver as far as a solution to this crisis goes?
That would be wonderful, but they are a very difficult situation, and they will not be able to give us a very happy year 2012. We have all the problems of this year, next year too, but nevertheless we have to find solutions, and we cannot make always only debts. These debts will be a burden for the next generation.
What about this one solution, the jointly issued debt idea, these euro bonds? Is that a solution?
No, that's a solution for southern European countries, but isn't a solution for the Netherlands, Germany or France, and therefore these countries shouldn't accept it. It's socialism in the financial market. Every country has to solve its own problems. It might get help, but not on that way.
In that case, what would happen to countries like the Netherlands and countries with top ratings as far as credit goes?
We are operating this public money against the markets, and this costs money in all the next years. And we have to accept that the price, the interest rates in the market is a very good solution for the future. And acting against it is very dangerous. We have no pressure on the countries not doing their homeworks.
The German Chancellor wants changes to the EU treaties. Would that make all the difference?
It is absolutely necessary to go that way, but it will not help us. The crisis is too hard to solve in the moment. But we had a very good treaty. That was the Maastricht Treaty. But even Germany and France didn't accept the treaty when they had difficulties in their own countries. Therefore, we need sanctions, and that has to come fast.
Surely, if something like changing EU treaties is adopted, that would certainly send a message to the markets, don't you think, of optimism? That's something that the markets need at the moment. Wouldn't you think, even though that's a long-term solution, that it would, in the short term, provide some sort of optimism?
But that will not be enough. I accept it. It's a good solution, but we need more. We need a haircut for Greece, and we need that Greece will go out of the euro. That helps the euro, helps Greece. Greece is much too expensive in the euro further on and will not be competitive. Therefore, we have to combine that solutions.
Well, talking about costs, what about the Euro Rescue Facility? It's falling short of the 1 trillion it needs at the moment. Investors are hard to find because of the uncertainty, I suppose.
Yes, but you have to find the right combination between return and risk. And if Germany, for example, with 2% interest rates, wasn't able to get the market on its side, that's no difficulty. Take 2.1, and that would be the solution. But Italy, with more than 7%, is in really difficulties.
Okay, Wolfgang Gerke, thank you very much for joining us.